Good morning. In today's video I'm just going to be talking about the condition of the market currently, and if there's going to be a market crash, and how growth stocks have currently had quite a large sell-off, and whether I think they've been oversold or not. I'll go through a few stocks that have sold off quite considerably over the last few months. I'll have a look at the market overall as general, and then I'll do a case study on Greg's, which had a dip in its stock price last year and had a bit of a crash in its stock price last year due to Rona, and show you how not to panic in the market really when things aren't going your way. Really, what my main part of this video is, I don't want to go on too long in this video, is should you buy or should you sell? Is it time to buy the dip or should you fear the fall? Now, if you haven't done your due diligence of research into stocks, then yeah, you should definitely fear the fall, because you're just buying on speculation without knowing anything about the company. I find that if you research a company and do your due diligence, you will understand the company better, and you will be able to sleep at night when the stock takes a 5% dip in a day or a 10% dip in a day. It's not ideal, but sometimes if you really do like the company, it's a good time to buy. Load up on the shares. And I just ask you, if you're new to the channel, could you subscribe to the channel and smash the like button to help this video with the YouTube algorithm. There'll also be a link to, if you want to start investing, there'll be a link to a free share in the description of this video. Yeah, so it's quite a big sell-off yesterday again in techs and growth stocks. A lot of what ARK invests in was a big sell-off there, and there has been since February there has been a slow progression out of growth stocks and into more value stocks. My personal opinion is the time to buy the value stocks was when the value stocks were trading at lower prices. Now people are all jumping in them due to many factors in the market, and they're moving out of growth stocks. Maybe it's more of an opportunity to buy the growth stocks. But don't just blindly go and buy any growth stocks just because the price has dipped 20%, because they might not be good companies. Just because they're a growth stock doesn't mean they're good companies. Do your research, check the balance sheets, check the growth, just go through all the numbers, check the earnings, and do a thorough research. Don't just rush to buy a stock just because it's dropped 40% in the last 3 months or 50% in the last 3 months. Do your research into the stocks. We'll just have a look at yesterday. As you can see, yesterday Tattoo Chef's pretty much held its TTCF held its price yesterday, but over the last 5 days it's gone down. It's had some good news in the last week and it's still down. The last month it's down quite a bit. The last 6 months, as you can see, it's pretty much where it was 6 months ago, after it had a bit of a rally towards the $29 mark, $30 mark. So there's stuff like that. I'll just go into some charts and stuff. See, the NASDAQ chart, 1 month, it's pretty much, it's not really a massive market sell-off, is it? It's only about 2% or 3% away from its market highs. So really, a lot of the stocks I've invested in are down quite a bit, but not too much. I mean, I'm 10% down on some of my stocks, but that's okay when you're building a position. And I'd rather that be, because I can build a position at lower prices, because I'm investing for 3, 5, 10 years, not 2, 3 months. So as I'm building positions, I'd rather the price. I don't want the price to shoot up 40% in the first month when I've just opened a position, because alright, I've made 40% on £1,000, where I could be making 100% on £5,000 in an investment over a 5-year period, which I'd much prefer than making a quick 20-30% on a stock. And plus, when stocks jump up that quickly, they are always due a bit of a pullback. So yeah, but if you look at the 1 year chart, yeah, if you look at the 1 year chart, it's still, May last year, that was after it dipped after COVID, after Rona. Shouldn't say that on here. And then, it's progressively gone higher, and then I think that's February. Yeah, February, March time, it's dipped again, it's gone up. It seems to be hovering around the 14,000, and every time it gets to about the 14,000 mark, it dips back a bit again. So yeah, and then if we just quickly look at the S&P chart, yeah, that had a bit of a sell-off yesterday as well. But if you go to the 5-year chart, you can see there it's progressively going higher. 5 years goes to 2,000, so it's doubled in the last 5 years. It just a slow progression here until the Rona hit last year, and it tanked again back to where, it didn't tank all the way back down though, did it, to where it was in 2016. It was still higher than where it was in 2016 after a massive, 30% decline, which you'd class as a crash. We're not quite there this year at the moment with in terms of crashes. Actually, the S&P's at all-time highs, been at all-time highs most of the year. And then over the last year, it's just absolutely exploded. So yeah, to me, a lot of people say about buying in the index fund, and I do hold the S&P 500 index fund as a core part of my investment strategy. But to me, to be ploughing money into the S&P 500 as it's going up to all-time highs doesn't make sense to me. I'm finding more value in these growth stocks that have been oversold off, and we'll just, we'll talk about, let's just have Skillz as an example. Skillz stock chart. It's had a bad day again yesterday. 5 days, it's down. 1 month, if you look at this, it's down over the month, but started the month at 1587, went down to as low as 12. Now, if you'd have brought in there, it went back up to 21. It's very volatile, but then people have probably brought in at 21 again, probably sold out here, and then people where you should really be buying, and as it's going back up, they've brought, and probably brought more at 21, thinking it's going to go back up to $42, which it was at its highs, and then they've just lost a load of money again. That's the point. You need to be picking when, if you understand the company and you understand how to value a company and where the company's valued at, then that's great. You know when to be buying these stocks and you know when to be selling these stocks. I'm personally a believer in a long-term holding. I've brought in at Skillz on an average price of $17, and I picked up a few more at $15. And if it goes down to $12, I'll buy a few more. And I might trim as a position then when it gets back to $18 to $20. Because obviously, to get my average price down, I'll have had to put more money into the stock. And then obviously I'll just take a bit more money out of the stock and have a smaller average. But that's the point. A lot of people are saying they've lost, 40% on this stock. Well, they were buying when it was $42 a share, when it was clearly overpriced. And it's been sold off and then sold off more. So it's massively sold off now. So it's definitely an opportunity to buy the stock at the moment, in my opinion. For the long term, you could still lose money in the short term. It's still going to be very volatile. It's still going to be up and down for many months and maybe a few years to come. But in the long term, I think it will be a great stock. I mean, I see more value in Tattooed Chef at the moment, which is why my position's much higher in Tattooed Chef. And that's why, people say buy fear, sell greed. It's easier said than done. A lot of people, you see it on social media. Skillz is a great stock when it's going from $20 to $30 to $40. It's an amazing stock. Now Skillz is gone down. Has been sold off. Now it's a terrible stock. It's been shorted. There's lots of bear theses on it. The same people that were picking the stock up and buying into the stock when it was going from $20 to $30 to $40 are now saying it's an awful stock because they've lost 40%. Well, they've brought in at $42 and sold out at $12. They're going to lose a lot of money in the stock, aren't they? If you can't control your emotions and that's your mindset in the market, you shouldn't be investing in single stocks. You should be investing in just the S&P 500 index, as Warren Buffett says. Now, I don't mean just, throw your life savings into one single stock, but there are opportunities to beat the market out there. But beating the market over a long period of time, not beating the market over a 2-3 day period. So, I'm 10% down on some of my stocks. And if I hadn't had no experience in the market to draw back on, I probably would have sold out of these positions, panicked and sold out of these positions. But I've done my research in the companies. I'm fully, like the likes of Tattoo Chef and Beyond Meat, I'm fully invested into, not mentally invested into these companies, and I believe that they'll do great over the long term. Beyond Meat's a bit of a turnaround play at the moment with food service reopening, and Tattoo Chef is just an amazing company. It's just bringing good news out after good news out over the last couple of weeks. Yet the price has done nothing. It's still hovering around the $17 mark, which is an amazing time to be buying. And sometimes stocks have a period of just flatlining and just staying stable for a long period of time. And that's your time to be getting into the stocks. And if they dip a bit, buy a bit more. So yeah, sometimes it is worth buying the dip. You don't want to just be buying stocks as they're going up. You want to be buying stocks when they're on a bit of a dip. And there's a lot of people that say don't buy the dip. It's just a trap. Yeah, it can be a trap. Like I said earlier, if you're buying companies you do not understand. Now, Palantir and Teladoc, they're probably great companies. I know nothing about them. So and a lot of people are going on about Palantir at the moment. I don't understand Palantir. I can't use it personally. It's not something I can use. It's not something I understand. So I won't be buying into the Palantir stock. That doesn't mean it's a bad stock. It just means I don't understand it. And, if it had a 20% dip in the price, I don't think I could hold on to that stock. So that's why I haven't brought into Palantir or something like that, just because it's dropped 40% from its highs or 30%. I'm not just going to buy that because it has. So buying the dip's not always necessarily right. But if you understand the company, you like the company at $25, it's gone to $17, you still like the company. The upside was good at $25. The upside's even better at $17. Buy some more. There's definitely, if the company's going to go bankrupt and the price is tanking, there's definitely red flags like high levels of debt and stuff like that. So you need to check the balance sheet. You need to understand the company. And, if it's cash rich and it's got good growth prospects, then buying it at cheaper prices is never going to be a bad idea over the long term, is it? Finally, I'm just going to do a quick case study on Greg's stock price. Greg's was an investment I made last year. Sorry, let's go to the 1 year chart. And if you look, this is actually after the Rona. And the price sold off. I think it was about £24 a share. But then it was okay, £17. It hadn't really been sold off that badly compared to some of the other stocks in the market like JD Sports and whatever. But then progressively, as lockdowns lengthened and obviously more lockdowns were put in place and restrictions were put in place to Greg's, and Greg's closed all its stores, and then obviously after it closed its stores, the first quarter of no profits, you can really see that in here. The price just tanked to about £12 a share. Now, to me, Greg's was never going to be bankrupt. It was never going to go out of business. So I sort of started buying in about these prices here, and I really went heavy into it because I believed greatly in Greg's. I love the product, I love it. And look, so I started buying in here, and even up to the, around about the £13 mark, all the way up to about the £15 mark. And then look, it tanked again. And I was about 20-30% down on my holding. About 20% down on my holding. Because obviously I brought a bit more in at the $12 mark as well. And then I just sat on it for a few months. Really sat on it. Started to recover about here. I think I brought a bit more here actually. So I still thought the price was good. And then, as you can see here, around about when the you know, the good news on the jabs and whatever came out, it just shot up, and then it just sort of stabilised, and it's just gradually, you know, even had a bit of a dip back there, gradually gone back up as time's gone on. And obviously, you know, you go into Greggs stores and you see they're quite busy every day. They're all open now, and the price is back to now. It's not. I mean, yeah, it's now back to where it was really. And I think briefly it hit yesterday. Yeah, let's have a look there. Briefly hit all-time highs yesterday of about 27 pounds a share. So yeah, if I'd have had the attitude, if you go back to the year graph, I mean, a lot of people know what Greggs are. If you don't know what Greggs are, I'll probably do a video on it in the future. But if I can ever get back into it, because my buy price at the moment would be £17 a share. I did sell out on about a 50% profit, which, you know, I'm kicking myself a bit for now. But because I invested so heavily into it, I made a decent amount of money. Decent amount of money into this stock, which, you know, strengthened my cash position for these dips that I'm buying into now. So this is where I started buying. Now, if I didn't understand the company and panicked, you know, when I've brought in at £15 a share and it's shot down to, you know, £11.5 a share, £11.50 a share, but even £11 a share at one point, then I would have probably sold out here and thought, you know, cut my losses. But because I understand the company, you know, I had a 5-year horizon on this company. I pretty much made my money back quite quickly, actually. That's probably why I sold the stock, to be fair. I thought it was due a pullback, but it's just gone off from strength to strength. So sometimes it's probably better to trim your positions than completely sell out of it, because, you know, what's the chances of me ever getting averages like that on Greggs again? Never say never, but it's not as high as it was then after the event that caused it to close its stores. So yeah, so, you know, don't just sell out. Sometimes buying the dip can be a buying opportunity. If you don't understand the company, don't buy the dip. If you understand the company, you've done your research, you liked it at $20, £20, and it's now at $10, £10, you're getting it at a 50% discount. So then in theory, buying the dip is giving you an extra, you know, another. You know, if you brought a stock at £20 and believed that its value was £40, that with 100% upside, and then it goes to £10, then you know, you can double down on your position, and then your upside is 400%. It's doubled. You know, you know, it's 4 times your money rather than doubling your money. So, you know, that's a great way of looking at it. So if you understand the company and its long-term perspective, then it's a good time to buy the dip. We're not in a market crash really at the moment. It's more of a correction. A lot of people say it may be a difficult year, and it may be a difficult year. I think it's not been an easy year in the stock market. I agree totally at the moment. It hasn't been an easy year. But with the experiences to draw back on, as you can see in Greggs and stuff like that, and I've had lots of little winners in my first few years of investing with JD Sports, with Boohoo, even 20-30% winners. You know, all these experiences to draw back on. And this is what gets me through days like that. Don't look at social media. Don't check your portfolio every 5 minutes unless you are going to be making a buy purchase or a sell purchase or anything with your portfolio. Do not need to be staring at your portfolio every 5 minutes. Do not need to be talking about it every 5 minutes. It's a game of emotion mostly. And if you fully invested into these stocks, buy what you want to buy, get your positions to the size you want to get them at, get it in the average prices you want to get at, and then just leave your portfolio alone until you're ready to sell the stocks. Or, you know, you might want to hold them forever. They might be that great of a company. I hope you've enjoyed this little video. I've probably gone on a bit longer than I want to. I always go on a bit longer than I want to. I always go off on a tangent. I hope you all enjoy your day, and I hope you all the success and long-term success and growth in your portfolios over the long term. If you're new to investing, there's a link in the description, obviously, to get a free share with Freetrade. Could I just ask you all to please subscribe to this channel if you're new to the channel. Smash the like button to help the YouTube algorithm. Hit the notification bell for future videos, and have a great day.